Hey everyone, in this video I'm going to answer if you should buy Rivian stock instead of Lucid stock. Of course, both of these companies are in the business of manufacturing and selling electric vehicles, and that's been an industry I've been particularly down on in 2023. If you've been watching my videos, I've been cautioning against investing in electric vehicle stocks all year long.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
And let me explain partly why I'm down on this industry. Of course, this is just one of many reasons why I've been suggesting to be cautious of electric vehicle stocks. And one of those is what I have here is a chart of vehicle production in the millions. So here's a chart of all the vehicles that are produced. This is EV and internal combustion engine. You can see the growth in vehicles produced, close to 100 million vehicles produced in 2017 and 2018, before the pandemic really disrupted operations late in 2019 and of course in 2020, when there were supply constraints and production were limited. But in totality, when there are no disruptions, when supply chains are working normally, there is capacity enough to produce close to 100 million vehicles. Now, that's an issue for me because overall, let me show you vehicle sales. Worldwide car sales grew to around 67 million in 2022. That was up from about 66 million in 2021. So you can say that there's demand worldwide for car sales of around 70 million. And so now that creates a problem for me. If you've got sales of close to, let's say, let's upgrade that. Let's say 70 million. But you've got capacity enough to produce 100 million. So there's a mismatch there between too much supply and not enough consumer demand for vehicle production. Now, that situation has only gotten worse in the last couple of years because companies like Rivian and Lucid are adding even more capacity to the mix. They've both spent billions of dollars adding capacity, adding manufacturing capacity. So now there's even more capacity. I wouldn't be surprised if there's capacity closer to 110 million vehicle production. And with sales at just 70 million, there's a mismatch there. And so you might say, well, why don't these companies just not produce that many vehicles? Well, the reason is because they've already spent the billions of dollars to build the facilities, to purchase the machinery, to hire the labor. And so those costs have already been spent. And so now, if they don't produce, then that would have just been wasted money. They'd rather produce and generate smaller losses in production rather than not produce at all. And so this is one of the reasons, just one of the reasons why I've been down on the electric vehicle industry, and partly because of valuations. These stocks have been really expensive. So now let's get more specific in comparing Rivian and Lucid. So in the most recent trailing 12 months, Rivian's revenue exploded to $3.78 billion, while Lucid has remained flat and actually decreased from July the revenue of $695 million. In fact, in the most recent quarter, Lucid's revenue year over year decreased. Lucid management said that because of this tepid consumer demand is not as strong as they thought it would be. They've lowered their production guidance to between 8,000 and 8,500 for 2023. This was down from the previous target of 10,000 production, and that was down from a previous target of 12,000. So things keep getting worse for Lucid in terms of customer demand. Meanwhile, Rivian, in their latest quarterly update, increased their production guidance to 54,000 vehicles for 2023. That was up from the previous 52,000, which is up from the previous 50,000. So Rivian is slowly upgrading guidance and revenue is still increasing. In terms of customer demand, it looks like Rivian is experiencing better customer demand than Lucid. Although Lucid just launched two new models, well, just launched one new model with an SUV. They introduced the SUV It'll start sales soon, and that's going to be in direct competition with Rivian's SUV. So that remains to be seen how strong sales are for Lucid's new SUV. I took a look at it and it looks beautiful. I've been saying Lucid and Rivian are two of my favorite electric vehicle cars, or SUVs, trucks, whatever you want to call them. They're the best looking in my opinion, and Lucid being better than Rivian in my opinion. So I'm a little surprised that Lucid's demand has been so weak, especially since they're producing so few cars in the just tens, not even in 10,000. I'm a little surprised. It looks like the price point is what is making consumers hesitant to purchase Lucid's vehicles. They are some of the priciest EVs in the market today. The next thing I wanted to compare these two on is their operating income, the trailing 12-month operating income, and you can see each of these two are losing billions of dollars on the bottom line. Lucid in the most recent trailing 12 months lost $3 billion on the bottom line. Rivian almost doubled that at 5.95 billion. However, Rivian is at least moving in the right direction here, reducing these losses on the bottom line as it is increasing production. Management's been saying that they've been making progress in improving the gross profit loss per vehicle. They've been making progress changing the powertrain. The lower cost of materials is certainly helping, and they're making progress on that front. Lucid, meanwhile, not yet at the point where they're making progress in reducing the losses on the bottom line. The next thing I wanted to compare these two on is cash flow from operations, and a similar story here. They're both losing billions. 2.6 billion cash outflow from operations for Lucid, 5.2 billion for Rivian, but again, Rivian showing progress where Lucid has not yet demonstrated progress in improving these losses on the bottom line. And of course, if you're losing billions of dollars on the bottom line, what I want to know is how much cash do you have? How long can you sustain these billions of dollars of losses on the bottom line? And Rivian has a strong cash pile at close to $8 billion, and Lucid has $1.1 billion, much less than Rivian. Rivian, though, you can see the cash pile, they had close to $18 billion at one point. That's come down all the way to $7.9 billion. They've been burning through billions of dollars of cash I just showed you there. Lucid, meanwhile, doesn't have that much longer to go with this current cash pile. Wouldn't surprise me if they need to borrow some money or sell some stock to increase their cash balance, given how much they're losing every quarter. And so that leads me to look at their average diluted shares outstanding. This measures how many shares of stock they have outstanding. The reason this is important is because if or when these companies become profitable, they need to split these profits among more shares, which will decrease earnings per share. And according to this metric, Lucid has been diluting shareholders much more rapidly than Rivian, which is undesirable. Lucid, just between July of 2021 and the most recent update, they've gone from about 1.4 million shares outstanding to 2.3 billion shares outstanding. Almost 1 billion shares increased into the market, while Rivian from that point had about 700 million shares outstanding. They've increased to 952 million. Rivian's been able to sell some convertible debt also, which has slowed their shareholder dilution a little bit compared to Lucid. And so finally, I wanted to compare these two on valuation. Lucid is trading at a forward price to sales at 6.8, while Rivian is trading at a forward price to sales of 2.4. Now, Lucid sales could be better in 2024 as they launch the new models, as the SUV comes to market. Hopefully that increases sales, but we don't know just yet. For now, they've been decreasing production and continuously telling investors that demand for their vehicles are not as strong as imagined. So it wouldn't surprise me if Lucid doesn't even increase production from the 8,000 in 2023 and they keep it at 8,000 for 2024 unless demand really picks up. Rivian, meanwhile, has increased from 25,000 last year up to 54,000 this year, and it wouldn't surprise me if Rivian increases their production next year closer to 75,000, especially considering they amended their agreement with Amazon for their electric delivery van, which allows Rivian to sell to more businesses now. And so if there's strong demand for the electric delivery van, that could increase Rivian's production and revenue next year as well. So if I was to pick between one of these two electric vehicle stocks, I would pick Rivian. Rivian would be my choice for the better of these two EV stocks. But remember, I'm still cautious overall on the industry, and if I had to choose, I wouldn't buy either one of these EV stocks right now for all of the reasons I've been talking about all year long. But if you forced me to pick one of these two, I would pick Rivian over Lucid. But before I let you go, if you gained any value from this video, please subscribe to the channel. It really helps support videos just like this one. Thank you so much for watching.